You're listening to Real Talk Texas with local expert Steve Hakes. Now, here's Steve.
Welcome back to Real Talk Texas. I'm your host, Steve Hakes, and in the studio today, if you've just tuned in, I've got Andy Raub of Raub Capital Management Team of Ameriprise, and that's Raub spelled R-A-U-B. If you want to look him up online, or you can reach out to realtalktexas.com, send me a quick note, and I'll get you in touch with Andy, a real expert for us for financial planning with Real Talk Texas team. And Andy, you know, on the break, what's happened so far in the show, we talked about what financial planning is, what kind of cash reserves you really need to have, is anywhere between 3 months and a year of what you spend for emergencies, depending on what you like to do. And that's a great place if you're listening out there to get started on. I know it's the holidays and all those things. If you want to call me, I'll refinance your house. You can skip a payment. You can put that payment into that cash reserve account. So possibly even skip two. But one of the things I wanted to get into with you, Andy, is really talk about investing in 2013. What do you think is going to happen in 2013, and how do I start getting ready for retirement? Those are the three things that I'd like to touch base on real fast.
Okay.
So let's start with 2013, which I promised before the break that we'd talk about. What do you think the financial market's going to look like in 2013?
I honestly wish I knew. And there are two ways to go. If you look at the financial markets, you have two things right now. You have a stock market that is historically fairly low priced. There should be some upward room. When you price stocks, you price it based upon how much the companies in, say, the S&P 500 earn, and you attach a price to that. And right now, from a historical standpoint, it's fairly low. So there should be some upward movement in stocks if earnings continue to grow. They grew great last year and the year before. We're starting to see some deterioration in earnings from the big companies. So that's a big if. The second thing is interest rates. Interest rates have, as you know, Steve, have dropped enormously. They're on the floor. I said they were on the floor last year, and then they went lower. And the Fed is executing this QE3, which is designed to lower interest rates even further with the hopes that it would stimulate growth.
Yeah, it's amazing. I mean, I was talking to clients over the last maybe 18 months ago, 12 months ago, and saying, hey, I really think we're at bottom. I really did think we were at bottom. We've never seen interest rates this low. It's crazy rates. And if you haven't refinanced it yet and your rate's over 4%, give me a call at 214-643-6021. You hear the ads on the show, so I won't get into that. But yeah,
well,
absolutely.
You're exactly right. And interest rates are a two-edged sword. They can, for retirees who depend more on fixed income, it's killing them because they can't get any return for risk or lower risk assets.
And most people at a retirement age probably put money in more secured assets because they can't afford to gamble them.
Absolutely. And the other side is it presents enormous opportunities if you're on the other side of the curve and you're borrowing money and doing things like that. So it is a two-edged sword. I think one personal opinion that lower interest rates are not going to stimulate growth. We've seen that. But that's an opinion. One of the dangers comes in people, and we've seen investors pouring money into bonds and bond funds when interest rates invariably turn around, because that's the way we inflate the dollar. One of the ways is through interest rates, and so they invariably have to turn around and begin going north, maybe several years. But when they do, then those assets such as bonds, if you think of a teeter-totter and a bond works, the value of a bond goes up when interest rates go down, and the value of a bond goes down when interest rates go up. And there's a lot of danger in the bond market right now, but people continue to put money there. And what the Fed has done is they have disincentivized people, big word, I know, to invest in lower risk assets such as bonds and money market funds and CDs. And they have forced people to invest in riskier assets such as stocks. And so you have a lot of risk out there from an investment standpoint. That's a longer-winded question or answer than you wanted, but it does play to people. Let's take two different people. Somebody who's retired or retiring. How do they get enough income every month? Because in retirement, you're taking monetary assets that you have and turning it into a stream of income. So you can either live on the principal or you can live on the return. And the return right now, unless it's in a risky pool or riskier pool such as stocks, is really difficult to get. There's some ways to do that, but it's very difficult. You mentioned earlier a younger person such as your son. What do they do? And the longer the period of time of investing, typically the more risk that somebody could take. So if you're out there and you're 30, 35, 28, whatever, have a 401k plan, I would absolutely max out as much as I could in the 401k.
Well, and I was asking you on the break, my son's, my oldest son is out of school and he's working for a good company and they match some of his contributions. So anytime a company matches, I think it makes good sense to go ahead and participate because that's extra, 1 to 3, 4% that you could make.
Make sure you get your match. Absolutely.
At least contribute to that. What would be your advice for a 27-year-old person going into a 401k as far as, usually I think they give you pretty simple choices, high risk, medium risk, low risk, conservative, whatever it is. Where would you is there some kind of correlation between age and risk that you would go into that?
Well, there historically has been, and I think that's predicated upon what I said, that the longer the period of time you have to invest, the more risk you can stand. Think of an accordion or bellows that go up and back. The farther out you stretch it, the flatter those bellows become. And that's kind of like the stock market. The shorter, the more you press it together, the more peaks and valleys you have. And therefore, risk on a short term in stocks is extremely high. But historically, risk in stocks is extremely low over a 10, 20, 30-year period. And so for somebody that young, I would advocate being as aggressive as they're going to be comfortable with and just leaving it alone, frankly, because time will heal all wounds in most cases. That's usually works anyway. So
Andy, let me ask you, you've been in business a long time. Who are the typical clients that you have, and who are the people that are out there listening that need to call and talk to you?
My typical client is somebody who is 50 years old or older. A lot of our clients are retired in their 70s, and they're facing perhaps a life event. And let me give you 3 examples. One, they're facing retirement. How do I go from getting an income to having to create my own income? Or they're facing some catastrophic thing. I just lost a job. What do? I just lost a husband or wife. What do? A lot of our new clients right now are women in their late 50s to mid 60s whose husband is now ill or whose husband has passed away. Incredibly dramatic for them because what do? And we have a team of people in my office that deal specifically with people like that. And it's almost a ministry at this point in time. So when these life events happen, that triggers a need to really get your financial act together. And that's where a lot of our brand new clients are coming. They're really coming to us crying for help. I don't know where I am and I need to get a plan together. And so that's we try to deal with retirees. If you think of a stack of blocks and you've got 4 different blocks, we try to deal with retirees on this basis, and I think I mentioned it before. What's the essential income that I have to live on? What then the next block is, what kind of lifestyle income do I need to have? Is it in form of cash reserves, in the form of additional income, so I can maybe take trips, give to my grandkids or whatever? The third block in the stack is going to be risk. What can possibly wipe me out? And we need to assess that. And then the fourth block is what I call legacy. What am I passing on, not just in money, but other things to the next generation, and am I passing it on correctly? Do I have all my legal documents in order? Powers of attorney, executorships, and these kinds of things that are essential. And they're just pieces of paper that sit in the box until somebody needs them, and then everybody's scrambling to find them. And I can tell you all kinds of war stories about documents that were not right, and it made a huge difference in the way the family reacted in the midst of crisis. So those are the 4 blocks that we try to look at: essential income, lifestyle income, and future growth, risk, and then the estate and legacy planning. And those are critical issues for everybody. Really.
And I think that's great advice. And if you're listening out there and you maybe need to dust off, your financial plan that you put together years ago, or you haven't even started one yet, and you're at that point in your life, please reach out to us here at realtalktexas.com. Send me a quick note and say that you'd like to get in touch with Andy. That's Andy Raub, R-A-U-B, and he's with Raub Capital Management of Ameriprise Financial here in Dallas. And Andy, it's been great to have you in the studio today.
Steve, I've really enjoyed it. Thank you.
I certainly will refer my customers to you. And I really think that if you're listening out there and you're thinking, boy, I didn't think of that, I really need to refresh my thoughts. And at this time of year, most people start doing their business plans for the next year. I think you should also be doing your personal plan for next year and forward. And it's a great time to reach out, sit down, put a pen to paper, figure out where you are today, where you're headed, and don't worry too much about the fiscal cliff. According to Andy, it's going to happen or it's not. It doesn't really matter. You just have to have your plan, your life plan, and your financial plan going forward. So tune in next week to Real Talk Texas. We're going to talk about something you're really going to want to listen in on. We're going to get ready for next year's taxes and that tax season between January and April, when everybody has to take care of those things. If you want to make some quick moves, send me a quick note through realtalktexas.com, and we'll put you in touch with Andy, and he'll help give you the advice you need before the year end as well. So thanks for tuning in, and I'll talk to you next Sunday.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.